Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for November 29, 2018. Just as we're turning the corner into December, will we get this Santa Claus rally? And what levels are important for technology names, especially our monsters of tech? That's where we'll start today's video. Looking at the daily charts and making quick comparisons. If you have any open positions or open option plays in our big tech names, we'll take a look at these levels and what the expectations will be for the rest of the month. Mainly, they are all downtrending. They are all pushing away from their July reversal highs. And a little bit with the exception here, Apple peaked in September. Google is about July, and Netflix was June. I can't fit all 5 of them on one screen, but the other stock would be Amazon. And that peaked a couple times into August and September. Nonetheless, these strong uptrends broke, and they all gave way to strong downtrends. Facebook, and to an extent, almost Netflix, and Google are negative on the year, especially Google. They started off here, about 1,100 per share, and is now pushing right back to where it started at the beginning of 2018. So keep these in mind as you're positioning. Don't lose track of these anchor points, where the year started, and whether or not these stocks are positive or negative. And we can take a look at them individually. Let's do that, with the focus being what are the probabilities of an end-of-year rally, and where might that rally take us. We've already got our expected play up away from support targets, just quickly saying about 130 in Facebook, about 1450, 1500 roughly speaking in Amazon, 250 in Netflix, and about 1,000 in Google. And Apple, that rally point was actually a little bit less than what we expected. And that was about 175, roughly 179, almost 178. So Apple had some tariff news and iPhones and things like that that actually pushed us beneath our expected targets. But we are getting a bounce up at the moment. And now let's take a look at these just from our perspective on the daily chart to our left, and the hourly chart, which is more for short-term traders, on the right. And again, we'll also finish by looking at expected movement and our option probability of expiring, our cones of expiry at the end of the video. But mainly this perspective is looking at the daily charts, again, where we are in relation to the start of 2018. A little bit above them in most of these stocks, and a little bit beneath them in some of them. Nevertheless, this year has been a wash. Strong rally, just a strong sell-off. And we are getting a bounce as expected, or as would be logical, off of 64 per share in our XLK. We have achieved targets we've been discussing. That's about 68 per share. And we will be seeing if these markets can push above to 69.50, ultimately to 70 by year end. Even if this downtrend continues, we still can get powerful rallies. The most recent one being in October from 65, almost 66 per share, just shy of 71, or 72 per share up here. So anyway, just keep that in mind as we push forward and to December. Microsoft isn't really a titan of tech or monster of tech, but it's still a market mover. And we can follow it, which is stronger, on our push up away from. We have plays into this with calls up away from 102.50, and that has exceeded our targets we discussed in prior videos, that being about 105 and 107. So Microsoft shares are just into the 110 per share level, and that once again is higher than our moving averages and price pivots. So keep watching this one. If it can trade above 112 and 112.50, that will open up an end of year rally toward the highs, about 116 per share. Otherwise, look for this 112.50 to play into short-term resistance. In Facebook, we continue to see this chart that looks a little bit like crude oil. It's a persistent falling downtrend within parallel trend line channels. And we had this play off of this recommendation to play off of 130, and that has been good, at least for the moment, toward the 20-period moving average. And the other play is up to 144, thereabout, which is the falling trend line. You can see multiple examples in swing positions where that has occurred. A bounce up away from the lower support, up toward at least the moving average, 20-day moving average, and then maybe even beyond that to the trend line. Those are short sell positions too. So if you play these with in-out spreads, positions are put on as close to the 130, 130.50, 131 level, and then put on, taken off, removed, and flip reversed with a push up into the trend line or other targets. That's how we play these things. From spot to spot, marker, marker, level, level, trend line, trend line. And the same will be true in Amazon. So however you position, we're playing from something to something. So Amazon also has achieved a short-term target we've discussed, and that's about 1,700 per share. This happens to be a super confluence. It's the 200-day simple moving average with the 50-day exponential. Those aren't magic levels, but they just do overlap at 1,700. We also have a reversal candle there today, which is suggestive of a sell-off, more likely than not, yet to come. So if you are long or positioned into this with a relatively tight target, go ahead and look for profits into this spot for a potential sell swing. Use 1,700 as your pivot. If shares can push above here, you probably see a rally 100 points higher, and that will take us, seen here on the hourly chart, to about the prior high, just a little bit shy of 1,800. So that's a key pivot for Amazon shares, just looking simply. Now, Apple, once again, was a little weaker than we would have liked. Broke some support targets we would have preferred it didn't break, and is pushing off of a lower base of support, at least in compared to other technology names. So Apple is trying to trade back, at least, toward its 20-day exponential, and it's fallen shy of that. This may be the third time. So watch 185 per share. It's a gap fill spot. It is a pivot point. And if we do see it above this, we probably see it up $10 higher into 195. That's at least the moving average and a price pivot and that 200-day simple. Remember, none of these are magic. They're just levels and spots to manage risk, take on risk, put on positions, and take off in profit zones. Options are preferred in these candidates. Netflix similarly has rallied up to its moving average. It is just shy of 300 per share. It's a round number spot where it will be watching, just shy of that at the moment. Nonetheless, all these stocks are downtrending and either will revert or reverse or retrace lower down away from resistance. I might even say that would be the dominant thesis or a logical thesis, but that just gives us our alternate thesis, which says to expect a larger move, impulsive move, if the shares trade above all these resistance points. And we'll finish with Google or Alphabet, which similarly rallied up away from 1,000 per share all the way to 1,100. That is a round number spot, but it's also the 50-day exponential moving average. We can also see it here on the hourly chart. That's a great spot to take profits. Consider some in-out spreads short with puts, or otherwise engage a pullback methodology. Of course, with stops just above 1,100. And if in the event we do see a breakout, look for a play straight up to 1130 and maybe beyond that. We'll frame these, of course, in terms of pullbacks, targets achieved from support toward resistance, and then we'll categorize our open positions, take off open positions, and put on new ones with respect to any type of movement away from current spots. And of course, that could be with puts, calls, selling premium, buying premium, in-out spreads, or other ways to trade these movements. I prefer intraday tactics, but we aren't all intraday traders. And sometimes we prefer those bigger time frames or bigger picture movement, and that's what we would look for in all of these candidates. Take care, be safe. This is Corey Rosenblum with your Theo Nightly video for November 29, 2018.